Good evening and welcome to this, the first edition of Growing Zambia. Now, Zambia, of course, has been in the news for all the right reasons in recent years. This is a country of 14 million people, GDP about $22 billion, and real economic growth, excluding inflation, of around 6% for the 5 past years. So the story around Zambia for the past few years has certainly been positive. Now, we're here tonight to discuss what more can be done to ensure that the growth that we're seeing, the headline numbers that we report, are inclusive. I'm joined on our panel here tonight by the Honorable Minister of Commerce, Trade and Industry, Mr. Robert Sichinga. Thank you, sir.
Good evening to you.
I am joined also by the President of the Zambia Institute of Marketing. He's the Chairman and CEO of DNC, SAATCHI, Mr. David Kombe.
Good evening.
We also have with us tonight Ms. Beatrice Nkanza. She's the CEO of the Lusaka Stock Exchange.
Good evening.
Thank you, Beatrice. And lastly, but not least, we've got Trevor Simumba. He is from MCMI International Business and is a consultant. Thank you, sir.
Thank you. Good evening.
I want to start by pitching my first question to the Minister. Minister, I would like you to outline in very specific terms, number one, what's your target for attracting foreign direct investment into Zambia? When we look at the stats last year, Africa attracted record FDI flows in its history. Number two, what specific measures are you putting in place to ensure that the pace that we have seen is actually sustained in the years ahead?
You're right in saying that Africa has experienced tremendous amounts of investment. To give you some idea, for the previous year, 2011, Zambia attracted about $5.4 billion United States dollars investment. Now, you may also wish to know that last year was probably not the best of years in terms of investment because we had the elections in 2011. And clearly, many people tend to hold back on investments until they're sure of the kind of government they will have in place. You asked me about the target. It's very difficult to give an exact target because a lot of it depends on how you have marketed the offerings of the investment opportunities that are available in the country. I can safely say to you that our intention for this year is to exceed the $5 billion United States dollars that was recorded last year. And in this connection, what we've done in terms of specific measures you've talked about is we have undertaken specific investment promotion opportunities out to the country. We have been to Australia, we have been to Dubai, we've been to Doha, we've been to Turkey, we have been to India, we've been to United States, we've just come back from United States, and we do have 2 other locations that we need to go to on the northern side, and that is Asia and on to Europe. Our target is basically to exceed the $5 billion United States dollars investment. And what we're doing is we are selling to the investment community the opportunities that exist, in particular in the areas of energy, in terms of creating dams, in terms of power generation, obviously to overcome the challenges, the current challenges in terms of the energy. And you cannot even talk about industrial expansion without the oil of energy.
I was hoping, Minister, that you'd be able to give me a percentage in terms of the number that was reached last year and try and compare that to this year. Are we looking at 10%? Are we looking at 10 to 15%? Are we looking at perhaps doubling what we saw last year?
As I've given to you, we are expecting to exceed the figure that we had last year, was about $5 billion. It was $5.4 billion, so we're expecting to exceed that. But as I said, what we expect to come out of the present effort is that we will in fact exceed that. But I'm not going to commit myself to a figure yet because clearly it takes time. And I may use this opportunity just to explain to you and to the listening public what tends to happen. The first stage is obviously that of commitments.
Right.
The individuals express interest, they make their commitments through the Zambia Development Agency, and they say, this is what we intend doing. My experience when I've looked at the figures and statistics that are available to us is that it takes between 1 year at best and up to 5 years at worst in terms of actualizing those commitments. And even the actualization works out to in very low percentages. For example, in terms of the values that are actualized hover somewhere around 37% of what is pledged.
Right.
In terms of job creation, it hovers just over 31%. So in other words, the commitments that are made are not usually actualized for whatever reason. Then there's the gestation period between starting a project and completing it. And this is the period I've given to you, which is between 1 year and 5 years, somewhere in that category. So one of the things that we're working on is to enhance the yield. Once you've made the commitment, how well does it actualize? How well does it create the jobs that we are looking for? So one of the options that we have is to increase the volume. And this is why I'm not giving you an exact figure. It may be double, it may exceed that. Already, as we stand at the moment, following our visit to Australia, we do have commitments that exceed 5 billion in terms of one project that is being undertaken. And because of the issues of the interests and the work that has to be carried, I will not be able to disclose to you the individual companies that are involved. But what we're expecting is that we'll probably double it, but I'm not going to commit myself to that particular figure. Suffice it to say that we will exceed the previous figures.
Minister, I write headlines, so the way I would report it, I would say, Minister says he may double last year's targets in 2012.
Those are your words, not mine. Not mine. Yeah. Suffice it to say that I think it's important to understand this, that you see, you can only realize now what you planted last year.
Understood.
So that was not planted last year, so we're doing that work right now. And I think it's important for us to recognize this. And also when you turn around an economy, when you're turning around a policy, you cannot just abruptly stop it. You've got to gradually phase it out as you bring in new measures, as it were. Because otherwise what you do, you send shockwaves in the investment climate, and therefore that can also be counterproductive. So what we're doing is that we are increasing on especially new investment as opposed to, shall we say, just increasing on what was already committed.
100%. Thank you, Minister. Let me come to Trevor here. Now, Trevor, you are a business consultant. So in part, the work that you do is to look at what the government is doing and look at what's happening on the ground in terms of companies that are trying to start up. So I'd like you to mark the minister if you can. It's the only occasion when you'll be able to do so. In terms of the government efforts that you have seen, the minister has spoken of $5.4 billion attracted last year. Yes. Now we know that Zambia has been growing in the region of 5, 6, 7% for the past few years.
I will correct you.
Is that enough?
Last year was 7.6%.
It's very precise.
Yes.
Has that been enough, do you think?
Any growth is good. All right. The issue of whether it's enough or not is subject to debate. But the issue is that
don't worry, there's privilege here. There's privilege here. The minister will not come back to you after the debate.
No. Zambia's economy has been growing. However, the growth that we have seen in Zambia's economy, unfortunately, has been driven by one sector, which is the copper mining sector.
Right.
And so this is where we have an imbalance. You must note that the mining sector today is highly technological. So the amount of jobs it can create is not what we require in terms of the number of jobs that we need to create in our economy, because most of the mining operations are now capital intensive.
Right.
Okay? And so the way the mining sector used to contribute to our job employment creation and to our GDP is no longer the same today. And so that is one aspect of that growth. Secondly, linked to that, the growth has not translated into a huge employment growth. Okay, so a lot of criticism has been made that it's been economic growth without jobs.
We call it jobless growth.
Jobless growth, exactly. So in terms of going forward, I think it's critical that the government looks carefully at how they balance policy with regulation. The difficulty that a lot of us in business, including myself as a small business, but even some of my major clients, and I was speaking to a major client just a week ago who was supposed to invest $140 million into this economy, but now has held on to that investment because of the recent SI 33 in relation to foreign currency transactions.
Right.
Because what has happened is that even though his revenue was going to be coming from local business, he had calculated his cash flows on the basis of $1 revenue because, you know, $140 million is a lot of money. So the financials, all the financial model was based on dollar.
There was a risk that was introduced that
Correct.
he had not planned
now,
for.
yes, now a risk has been introduced, so now he has to reassess. Now what happens with such a situation is that the gestation period that the minister was talking about becomes even longer. Because now a lot of the major investors now are going to wait longer than they should have. And so the government needs to find a balance in terms of saying, okay, there are a lot of things that were not going so well in the previous government, in terms of the jobless growth, in terms of the lack of empowerment of Zambian business, okay, which is an issue. So, but you need to balance the regulation with your policy. And I would think that the government should weigh more on policy rather than regulation, in the sense that use policy to entice business to move towards the goals that government wants to achieve. And so you need to use policy, for example, to enhance the ability of business to employ more people, to enhance the ability of domestic Zambian business people to expand and to grow.
Yeah. It's interesting you mentioned the jobless growth because I was looking at the numbers, and one number that I was looking for in my research was the unemployment rate of Zambia, and we engaged in a very spirited discussion with the minister about where exactly that stands, and we're going to be talking about those numbers in the program. Yes. But let me come to David.
Maybe before we leave that,
sure.
I think it would be important for us to clarify the issue of the SI 33, because I don't think that the understanding, the interpretation,
this is
and the hesitation,
the issue around the use of the dollar in the Zambian economy.
I'm going to come to that, but
sure.
I'm just saying to you that we need to discuss that so that we can dispel those concerns.
Okay. Yeah. Okay, let's come to that. But let me bring in David in the conversation because I want to know if the jobless growth that we're talking about is being translated in terms of the business spend that you are seeing, because your business depends on businesses growing and wanting to grow more to reach out more clients. Have you seen it?
No, not really. When we look at the business growth right now, you'll find the situation in that most of the funds or the money being made in this country is actually taken out of this country. Most of the money made out in this country is being spent outside this country. This country is dominated by international companies, okay? And we have a very good policy, which is a very good policy, which allows for free, exchange of free foreign exchange control. We don't have any foreign exchange control.
Sure.
You can repatriate your money and stuff like that, which is very good. It's very encouraging to business. But it has its own loopholes, because now what has happened is that instead of companies only repatriating their profits, they're actually even repatriating their sales, okay? So you find a situation where today's sales are made and tomorrow they're sent out of the country. So we need to look at that aspect and say, how do we control this? Because that is affecting the cost of doing business, the exchange rates. Now, when I say it's dominated by foreign companies, Zambia is more of a consumer market.
Right.
And in the retail business and in most of the industries, you find that it's dominated by the South African companies. And what's happening, like in advertising and marketing and stuff like that, what we have here are more like franchises, okay? It's just a foothold on the market. They're not bringing the big retail outlets from there. They're just putting a foothold and controlling everything from outside the country. So when it comes to promoting goods and services, they're not spending that money here. If you look at the advertising costs in South Africa, and you compare to the advertising costs in Zambia,
sure.
the spend,
yeah.
The two cannot be compared. The advertising industry in South Africa is a big industry. I, as a person owning an advertising agency, would today have been a multi-billionaire.
And it's not happened yet.
In Zambia, it can't happen. But in South Africa, it can happen.
I think we're going to come to the minister, because we're going to ask the minister what he's doing to make sure that small businesses also grow, because that's part of his portfolio. Beatrice, let me come to you, last but not least, because you are the final point, or let's call it the final point of expression of the growth that we are seeing. When the economy is growing faster and your businesses are being created, and those that were developed last year or 10 years before, they start coming onto the stock market. Are we seeing the boom that we've also seen in the GDP numbers that we've been talking about?
No, Godfrey, we haven't. And the reasons
How
are...
many companies have you listed this year?
This year we had First Quantum, but they were listing the depository receipts.
Rather than an IPO?
Yes. I was going to say that the reasons I think have been alluded to by both David and Trevor here, in that the stock exchange was created to offer opportunity to businesses to raise capital, long-term capital.
Yes.
It was also created to enable Zambians to participate in those IPOs as a way of empowering them.
Yes.
But what has happened is that since the first 10 companies that were listed were those that were from the ex-para status which government put forward. But since then, the next 10 that we have a total of 21. The next 10, of course, came from private companies.
Right.
But you can imagine that 18 years after the creation of the market, we should be looking at, say, 50 companies. We should be looking at listings of, say, 2 or 3 every year.
Yeah.
But it's not happening, and part of the reason is what David slightly touched on, in that those companies that would be eligible for listing are, controlled from outside, and therefore the the decision to list or not to list really doesn't coincide with the good government policy that was created in 1991 of creating the market and enabling companies to use the exchange.
So in short, the first step was taken, but it wasn't followed by further policy formulation and development that helped to develop the market. Minister, I said we're going to come to you for the solutions. We have to talk about the solutions.
Sure.
So how do we get Zambians to appreciate that this economy is growing at a rate of 7% or more, or the 7.4% that you alluded to earlier?
Well, it's not just the Zambians that we need to convince. I think it's the whole business community that we need to address ourselves to. Let me just touch on some of the issues that my colleagues have raised here. The challenge you have is this. If you're going to have a free flow of foreign currency in and out of the country, you will not just control it, but you have to regulate it. Otherwise, you have what is called transitory capital. Right. In other words, which comes in and goes out. It's important for you to understand this. Under the Zambia Development Agency Act of 2006, it allows for companies to set up here as subsidiary companies of foreign companies. And under the current law, under the Current Companies Act, once a company has been set up here, it is a Zambian company. Therefore, when it supplies as a Zambian company. In other words, we don't go behind the veil to say, well, the shareholder is actually foreign and therefore it's a foreign company. That is not the law. The next thing is that you would have to also recognize that any investment that takes place above a figure of $500,000, gets entitled to claim the benefits of tax-free for the first 5 years after you start making profits. Right. Okay. Thereafter, another 3 years, from 6 to 8 years, you do it at 50%. Then you start to pay taxes at 75% in the 8th and 9th and 10th year. In other words, for 10 years, you will not be contributing. And what has happened is that a number of companies have come, set up here, take advantage of the 5 years benefit, and after 5 years, change the company, bring the same shareholders but with a different name. And because we don't go behind the veil, what happens is that then you take the benefits throughout. So there will never come a stage for such companies, if they continue to behave like that, that they will contribute towards taxes.
So what's the solution, Benedict?
So, well, it's important for us to, for the viewers to understand this, and this is why it is important for us to review those particular policies. So let me come to the issue of the foreign exchange and the statutory instrument number 33, which Trevor has alluded to. The reason why that has become necessary is this. Before 2008 September, the exchange rate of the kwacha to the dollar was $1 was equal to between 3,300 and 3,600. The global crunch comes in, that value diminishes, it goes up to as high as 5,200, meaning that the currency just in that particular period has actually been devalued.
Almost halved.
All right, by 70%, in excess of 70%. Now, since the recovery from the global crunch, you have not had the recovery to the same levels as you had pre-September 2008. So what is happening is that an investor comes in, wants to take advantage of the fact that they can externalize money.
Okay.
Our location is that they ought to retain that resource, the capital, here. In most cases, when they've pledged, under the Zambia Development Agency, they've pledged their investment, many of them don't actually implement their pledges. Right. So they come to the local market, borrow in the local market, and then externalize the money that they borrowed from the local market.
It's a global village, Minister.
I understand. But what it does, it affects your industry accordingly. I cannot take into the United States 10,000, in excess of $10,000 in cash. I cannot do that. Okay? If I do, they'll ask me where I got the money from. So it's important for us to regulate it. So statutory instrument number 33 is essentially saying to you, given this background, given this economic environment, we ought to ensure that the transactions that are taking place in the currency, because you can freely convert it. If you don't do that, what it's doing is it increasing the demand for the dollar, which in fact devalues your currency.
Right.
And in which case you might as well have dollars. You don't need kwacha.
Okay.
That is, you cannot run a country like that.
Okay.
So it is necessary that you have this statutory instrument to make sure that the currency that you use for the transactions ordinarily is the kwacha.
Okay. I think it's important.
So I hope you understand that.
Yeah, maybe just to support the minister.
Yeah,
we've heard a lot about these things about investors trying to say they're not coming in the country and stuff like that because of the SI 33. Right. The bottom line is that the SI 33 is very specific. It talks only about domestic transactions.
Right.
And when you go to Nairobi, when you go to Botswana, when you go to South Africa, you will not trade in US dollar. Okay? The same investors, when they are here, they want to have a certain different rule of operations. But when they're in South Africa or they're in Botswana or somewhere else, they follow those regulations.
So Zambia, in effect, just falling in line with the rest of its neighbors and other countries.
Because the SI does not say that you cannot send out your money.
Right.
You can send out your money. Just use the rates at that day. We had a workshop for Zaki, and certain questions were coming out like, how do we pay salaries for expatriates? Look, they're working in Zambia, pay them in kwacha. They can remit their money outside when they need to. Why should that become an issue?
It shouldn't be.
No, it shouldn't be, because at the end of the day, we've seen a discrepancy in pricing in this country.
Yeah.
Because even to rent a house, they're quoting in US dollar, a house which has been built in kwacha.
It's an important point. I think that's very much for raising that.
Let's come to the issue of the job creation.
Yes,
Let me say this.
But I wanted to preface it like this.
Sure.
I wanted to say to you, an economy the size of Zambia, growing at 7% per year, and you compare an economy like South Africa, growing around 2.7, about 3% per year. They want 7% so that they're able to make a dent on poverty in a decade. Zambia, growing at 7% per year, will be able to make that bigger dent on poverty and create more jobs inside a shorter period. How has the economy been unable to create the requisite number of jobs commensurate with the growth rate?
To a large extent, it's already been answered. What you're having is that the capital formation is not in terms of the processing industries. It is in capital.
Okay.
It's the same thing that if you're investing, for example, in an oil exploration, there's tremendous expenditure in the equipment that you're putting in place, which will reflect itself in the economy as part of your investment, but does not convert into trickle down, if you want to
let's talk solutions then.
So that's what we do. So what we've done is this. From the point of view of the ministry, even the statutory instrument number 33 is part of the solution. What we're doing is that we would like now to go to the individual districts. And our development will be based on industrial clusters in those districts, based on the natural endowment and agricultural endowment in those localities. Because the benefit of this 7.6% has not filtered through to the rural areas and to semi-rural areas and even the urban areas, to the citizens, if you want. So we want to make sure that this processing of agro and agro-based industries is going to benefit the people at the local level. Let me give some examples. If I'm in Mongo, I know that I've got cashew, I know that I've got rice, I know I've got fish, I know I've got timber, I know I've got cattle. These are the products that we're going to build that clusters around. So this industrialization must take place at that particular local level. That's number one. Number two, we're building multi-facility economic zones in every province, so that what cannot be processed at district level can then be transferred into these multi-facility economic zones. So the district industrial clusters will be strictly for locals, for Zambians, And the multi-facility economic zones is where you can have the big investors coming in and participating, because we want to make sure that this is a balanced improvement. The 7.6%, or even if it was 8%, if it is in equipment, it will not trickle down to the citizens. Therefore, you need to find a different formula, which is what we're working on at the moment. But this was not planned last year, so we're planning for it now, and hopefully that by next year, we shall start to see the benefit of this. Our target for job creation, and let's go back to statistics here, a little bit on the profile. A population of 13.6 million. I want you to know that 10.2 million are young people below the age of 35. Of that population, 68% are below the age of 25. Of the 68%, which is approximately 9.1 million, half of them are school going, they're below the age of 16. Right. So if we were to take the cluster between the band from 16 up to 20 or to 35, which is the age of the end age of our youth, you are talking of approximately 5 million people who must have jobs found and created for them so that they can be able to, and this is what we're doing with the clusters. So we are trying to formalize now the informal sector, which is where the jobs are being created, and try to formalize that so that it comes into mainstream. Secondly, what you're producing at district level and in the multi-facility economic zones will then go into the intra-Africa trade centers, which we're building around the borders. 22 of them have already been identified. Now we're seeking funding to make sure that these facilities are in place. This is what we expect to create the 1 million jobs to absorb some of those young people. Because at the moment, the new jobs that have been created are no more than 5,000.
Minister, thank you very much for explaining. I'm going to come back to our panelists after the break for an assessment of what the minister is saying and whether that actually is the answers the issues that we've been raising. And also, I'd like from you to think about solutions. But that's after the break. When we come back, as I said, solutions, solutions, solutions.